Hello, everybody. Let me welcome you to this session about geopolitics of CBDC and particularly what central banks can do to address current geopolitical and security challenges. But before I introduce my distinguished panel guests, I would like to give you just a few minutes a central bank perspective on that topic. In a moment of, it says it's a moment of truth for Europe, and it's truly such for the European financial infrastructure. As geopolitical tensions rise, so does the weaponization of payments do as well. We have cyber attacks, blacklisting and sanctions, which are not longer just fiction but reality. Russia's brutal attack on Ukraine has shown that Europe also needs to strengthen its sovereignty. The central banks of many of the world's largest market economies are starting to develop CBDC in a race to strengthen their sovereignty and currency competitiveness. The euro system is no exception to this. Current financial landscape in Europe is fragmented as there is no digital payment option to cover the entire euro area. In fact, 13 out of 20 states are reliant on international card schemes, and 2/3 of the transactions in shops are done with them. Eurosystem central banks are certainly not negative about those payment services, but they also must have an option from an European perspective. The digital euro is a critical infrastructure for Europe. So in 2021, we launched the Digital Euro project to safeguard the role of public money and maintain confidence in our currency. The digital euro will become a digital form of cash, available to everyone in the euro area and accepted by everywhere. A digital euro will support Europe's strategic autonomy and monetary sovereignty, making our payments landscape more competitive, hopefully, and resilient. My name is Petia Niederländer. I'm a Director of Payments in the Austrian Central Bank and a member of the high-level task force of the digital euro in the euro system. And on my right, I would like to introduce my panelists. I have Andreas Dombret, who is Global Senior Advisor of Oliver Wyman, former board member of Deutsche Bundesbank, and in fact the first and only private banker on the board of the Deutsche Bundesbank, and also a former member of the supervisory board of the ECB. He has a dual citizenship, so European and American, so he can bring a little bit of perspective here. On my further right, I have Maria Demertzis. She's Senior Fellow at the Bruegel and part-time Professor of Economic Policy at the Florence School of Transformational Governance at the European University Institute. So she will bring the economic and geopolitical perspective here. Thank you. On my left side, I have David Birch. He's author and advisor and commentator on digital financial services. He's also the author of the book, The Currency Cold War. Sounds intriguing. He will bring insights from the international perspective on digital identity, digital money, and how they tie it into geopolitics. Then I have the opportunity to have two excellent students here with me, grant holders. I have Hanna Oberlechner. She's Austrian lawyer and PhD candidate at the Economic University of Vienna. And Lucas Caldeira Brandt on the very far side. He comes from Brazil. They have an excellent payment system and studies international law and geopolitics. And last but not least, I have Thomas Loninger. He's managing director of Epicenter Works. That's NGO for digital rights. He was on the board of EDRI, European Digital Rights Institute, and has various roles in the EU and UN concerning digital public infrastructure and AIDA's wallet. Welcome. There are a lot of different notions of CBDC, Andreas, and as a retail CBDC, the digital euro will primarily address the increase of convenience for retail sellers and consumers and the digitalization of trust in public sector. But there have been quite some other projects before in the history. We had Monet, 2011, instant payments, EPI. What is this time different, and can it become really a game changer or just more of the same?
I wish I could answer that, but first of all, thank you very much for inviting me to the Austrian National Bank. It's, I must say, quite amazing what Europäisches Forum Alpbach is putting together. Each and every year, it's getting better and better. I'm very complimentary of what you are doing here. I've been here before, and thanks for re-inviting me back. Let me start out by saying, as I'm the first one called by you, by stressing two things. They are very obvious, but I think it's important to stress them at the beginning of this panel. First, technology is evolving very, very rapidly, and David and others will speak about that. But we are having a technology now which we never had before, and no wonder that things are changing. And one of the things which is changing is consumer behavior, also in how to use payments. And let me give you some evidence of that. It is only a few years ago that it was impossible to do immediate direct account-to-account transfers in banks. This is not too long ago. Yeah? Now you can do that, and today's schemes, they cannot only do that, but they rely now on fast data, on data in a rapidness we have never seen before, and we are relying on internet access and sophisticated mobile phones, etc., etc. Of course, technology is changing things. Let me just add the buzzword of blockchain and Bitcoin, etc., which is important to some of those schemes we are having. So the opportunities look very differently today in terms of technology and also in terms of payments than only a few years ago. And you asked about a couple of past experiences, like Monet and others. The only, to my personal opinion, the only scheme which really worked and really was successful was instant payments. Now, the bankers in the room, they will say, the usage is not very high of instant payments. That's true. On the other hand, instant payments is now offered by almost every European bank. You can, I wouldn't even know if there are European banks who don't offer it. So it is really widely offered. Maybe not widely used, widespread used yet, but already widely offered. All the other experiences of the past, I wouldn't really call as very, very successful. Now, the public sector has pushed instant payments and was instrumental in regulating instant payments. We wouldn't have such widespread offering of instant payments without the public sector having pushed for it. Now, payment infrastructure projects, let me also say that at the beginning, are complex and require substantial long-term investments. And not every bank and not every group of banks can actually put up that money as the public sometimes can do. Let me come to the digital euro in this context. Now, I believe that the digital euro is a next progression from the previous ECB projects. It's just a follow-up of previous projects. It aims, and that's, I think, really important, at further harmonizing standards, both at the merchant level and at the consumer level. When we talk about retail CBDCs, we tend to think about the retail bank clients, but we also need to think about the merchants, of course. If the digital euro is successful, we will find ourselves in a significantly different scenario compared to the past initiatives. This is a very, very big change. So I believe the main benefit of the digital euro to be that it will be no fragmentation. What do I mean by that? There will only be one digital euro for the entire euro system, for the entire eurozone. And that will help it to get fast traction if there is only one offering and no fragmentation. And as you said in your opening remarks, Petia, there are a lot of payment systems. Here we would have a harmonization to one payment system. Implementing the digital euro does not come for free, of course. Sizable investments are needed, not only from the public sector, but also from the banks and from the merchants. So a lot of money will have to be set up. And this is why it is so important to get the calibration of the fee schedules right. Also privacy, which we will, I think, discuss, and you mentioned. let's compare Europe to the rest of the world, and you mentioned my background of having a US passport. In Europe, at least this is my opinion, and we will hear from Mr. Lohninger later, we have a much more careful, a much more conservative stance to data protection than, for example, in the United States. And that needs to be reflected. And as many offerings are coming from the United States, you really have to think, how does that fit to our data protection scheme? And if there's one thing I'm very passionate about, is that we need to prevent an oligopoly of data. And we are having a lot of oligopolies in the banking system, and why should we have one on the data, personal data of people? Last but not least, I would like to make a remark on behalf of the banks. Now, the banks clearly will lose revenues through the digital euro, and quite some revenues, I should add. The compensation is needed, and compensation was offered in the paper of the ECB. But what irritates me is going beyond the digital euro. The banks and the bankers are more and more disintermediated, whether it's in payments, it's also in private debt, it's also in private equity, it is by the non-bank financial institutions. This used to be called shadow banking, now it's the non-bank financial institution sector. And if you disintermediate banks all the time, our banking system will change, and that means that a monetary policy through the banking system will change, and there also will be a threat to monetary policy, because we have a system where central banks work with banks, and we need to have this in mind, that we cannot solve this alone as the public sector, but that we need to work with the banks in context.
So let's get a little bit more challenging or provocative here, controversial. You say that we have a challenge to solve, but we most probably open a much bigger issue by that, right? Maria, on the geopolitical level, there are some merits saying that tokens and tokenization can bring new balance in international trade, can help to democratize trade between different regions, and some advocates even so far that they say increased usage of digital euro could strengthen the position of the currency. How do you see that? Is there really a geopolitical impact as we expected?
Thank you very much, Petia. There certainly is a geopolitical impact, but I do not believe that the digitalization of the currency is going to increase the attractiveness of the currency. I mean, certainly not for the euro. I think for the euro to increase its international role, other things need to happen, and they pertain to the architecture of EMU. This is the bit that will convince the rest of the world to increase using the euro. For the moment, the dollar is such a supreme currency. 55% of global reserves are in the euro, only 20% in dollars, only 20% are in euros. But the vast majority of global financial flows, about 80%, are in dollars, a little bit in euro, and the rest is the rest. So we are very far from challenging the dollar in its global position, and for something like this to happen, we need other things than just the digitalization nature of the currency. But I actually think it is, if anything, we are going the wrong way in terms of the attractiveness of G7 currencies, and I'll explain to that why I think geopolitics are crucial here. But before I do that, if you allow me, Petia, I want to go a little bit back and also touch on some of the issues that Andreas touched. And I think that we have not been able so far to verbalize to the consumer what the value added is of the digital euro. Yeah? It doesn't mean that it doesn't exist, the added value, but I don't believe that we have verbalized that. So let me explain what I mean by that. Fast forward to 2027, 28, imagine a scenario in which there is a digital euro, and I ask you, would you open a digital euro account? Yeah, as a consumer, would you open one? And you know, what kind of things would you have to answer? Would you have to think about to give an answer to this question? As a person, you pay with cash, or you have the ability to pay cash. 50% of all payments in the euro area still happen in cash. Half of this room pays in cash, and half of this room pays in digital payments. That's quite a remarkable amount, but that's the truth of it. The future, of course, is digital. Nobody will argue against that. I just don't know what the speed of this digitalization will be. But the other thing that you will want to answer is, well, do I have sufficient means of payment to fulfill all my needs when I go abroad or when I stay inside. I pay with my bank card, I pay with cash, I pay with Apple Pay or Google Pay. Why do I need an extra form of payment? What is it that I gain from this? And I think if communication had to do something, is to explain what it would be tangibly different for the consumer. For the prospect of the pickup of the euro, because we have to reckon with the real possibility that 2027, 2028, there will not be a pickup of the digital euro. What does that mean? Is that a failure? Or is it not a failure? And in my view, it is not a failure. There are reasons why we need a digital euro. We just need to verbalize what these reasons are. We will hear a lot more about this in the course of this panel, but 2/3 of all payment services that are done in the EU are done by companies that are not EU-based. Okay? Do we worry about that? Well, we have come to the point where we worry about that because there is high concentration of payments, of a service effectively that is not EU-based. And if there is one thing that the next European Commission will worry about, and that is economic security. Yeah? Economic security means if you worry about economic security, you worry about diversification, and you worry about increasingly more about EU-based solutions, and that is the reality of it. Whether we like it or not, as economists, we are against these ideas because they invoke instincts that are very protectionists. But the fact of the matter is that the future, at least the immediate future, will be one in which we have to move away, we have to diversify. So that means that we have to rely a lot more on our feet, and we have to find EU-based solutions. And this is where the digital euro can actually offer that security. Of course, as a consumer, you don't immediately think about robustness in payment systems, but I expect that policymakers look after our interests when it comes to these things. And this is why I think a great value added would come from this diversification. It will not be done on first principles of optimization, because I believe private solutions are required. We don't live in an environment where the economy is driven by the government. We live in an economy where solutions are privately induced. But when you worry about security and robustness, you worry about other things than optimization, and that is where the digital euro will offer the first step. There are important geopolitical shifts, and I come back to the geopolitics of it, that are important to understand. And they don't come so much on the payment systems as they come on the settlement infrastructure. Let me remind you, in March of 2022, after the invasion in Ukraine, when Putin asked European gas buyers to pay him in rubles. Why did he do that? He did that because if we were to pay him Europe were to pay him in euros, those euros would not be accessible to the Russians because they would have to be settled at the ECB, and the ECB cannot settle a transaction when one part of the transaction is a sanctioned authority. That means that Russia lost access to all international currencies, to all G7 currencies, through the sanctions that we put, the G7 sanctions, and therefore they have lost access to the international financial system. The rest of the world saw this and said, "Ooh, we could be next. We could be next. We could be cut off of this," and therefore relying on the dollar and the euro international settlement system is something that is very vulnerable to them. CBDCs offer an alternative settlement infrastructure if and when it becomes operational. That's not trivial, but if and when it becomes operational, they will offer an alternative settlement structure. And we see already that the interest on CBDCs has doubled as a result of the Russian invasion of Ukraine. There is now a lot of central banks that are thinking about alternative settlement infrastructures. And therefore, the attractiveness of the G7 currencies, including the euro, it will necessarily drop because we like the euro and we like the dollar because they offer good pricing mechanism, but also settlement infrastructures which are not available globally. My advice would be for the euro area and the ECB and central banks and national central banks to participate in the BIS experiments when it comes to setting the standards on global CBDCs, because we have something to lose. The US has a lot more to lose, but we also have something to lose. We need to participate in these conversations.
That's very true, indeed. So there are a lot of incentives of BRICS countries and other countries which explore CBDCs and interoperability between their own currency systems in one or another way. But before going further in that direction, we also know that you said that there should be an innovation, so there should be a cooperation with the private sector. The consumer should understand why that's for, and that comes only if they're right products as such. And here I want to bring, David, your perspective, because we talk about infrastructure, but actually we should talk about products and innovations. Do you think that infrastructure can spark innovation, and how digital euro is in position or in comparison with other projects? Because there are few other projects. Bank of England does something. There are faraway projects and closer to our jurisdiction. What do you see there?
Actually, but I've got sidetracked now because I just want to, Maria made me think about something else. So I disagree with the point about asking consumers, because, I mean, consumers didn't want iPods or GSMA or seatbelts or anything. Like, asking consumers if they want something, I think is pointless because they don't understand. And certainly when it comes to creating a digital euro, I've seen some of the ECB surveys of European citizens, and they're all pointless because you're asking people, what do you think? Do you like, do you want something that you don't understand what it is? And actually, we don't understand what it is either, but let's just put that to one side for the moment. So I think consumers, I think, is the wrong, and also you have to ask yourself the context of the consumer use of it. It's not clear to me that consumers would ever know about it, because as a consumer, you know, I walk, you know, in the future, if you're 5 years' time, 10 years' time, when these young people, well, there's some young people here, I can't, well, so when some of these young people, when they go shopping in the future, you know, you go into Carrefour, you pick up the things you want, you walk out, something comes up on your phone, you owe 75 euros, and you hit OK, you look at it. And there's at least 3 ways that payment could be made. It could be an ISO 8583 pull like it is now over Visa or MasterCard or something. It could be an ISO 222 push across SC Inst, or, you know, some form of SEPA payment. Or it could be some form of central bank digital currency payment that goes over the internet and not via the banking net. Now, as a consumer, what you see is the money comes out of your account and the money goes into Carrefour's account. Do you care how it gets there? Because that's not clear to me at all. I don't know why consumers would care about this. I don't know. So the consumer point, I think, is more. But to the infrastructure point, to understand why. I mean, I know what you're thinking. You're thinking like payments is quite boring, and you're right. And we can't pretend any other. Like, I'm going to have to tell you, payments aren't that interesting. Okay. So why is CBDC interesting? Well, the reason is this. And it relies on you know, I'm a nerd about these kind of things, so I use words very carefully. There is a very big difference between electronic money and electronic cash, okay? So to understand the infrastructure, we need to make that difference. Because you're all thinking, why do we have CBDC when we already have, you know, SC Inst, and we already have SEPA and instant payments? Like, you've got to understand the difference between money and cash. So in the future, we want a resilient European infrastructure. And that means we need 2 kinds of infrastructure. We need electronic money. Electronic money lives in bank accounts, and it flows across banking networks. It flows across SWIFT. It flows across EBA clearing. So we have electronic money that lives in bank accounts and flows between bank accounts, and we need that. And we want that to be as efficient as possible, and we want it to work, you know, as super fast and blah, 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 with all the protections. Electronic cash doesn't live in bank accounts. Electronic cash lives in your pocket. I mean, not metaphorically, because obviously the electrons would slip through and fall out. So you have to have like a USB stick or a phone or something to put it in. But you know what I mean. You get the general point. Cash doesn't live in banks. Cash lives in your pocket, your car, your hat, your phone, whatever. We need both of these. Why? What's the crucial difference between the electronic cash and the electronic money? Electronic money flows through bank accounts. Electronic cash flows between devices. It doesn't go through banks. So if I pay you, like imagine I'm paying you 10 electronic euros in the future, 10 digital euros in the future. Those digital euros go from my phone, my hat, my badge, my watch, my car, to your phone, hat, badge, watch, car. It doesn't go anywhere near banks. It goes from device to device. And a crucial design characteristic of electronic cash, if it's going to provide any kind of population scale benefit to the consumers, is it has to work when there's no internet, no mobile network, no electricity. It has to work like cash. So if I'm going to pay you 10 euros, the 10 euros, I don't know, I tap my phone on your phone, I tap my badge on your phone, I touch my USB stick, whatever. But the point is, it has to work when there's no power, no mobile network, no internet. And we need both kinds. So for Europe to have the resilient infrastructure that it needs for the future, we need both kinds. So to answer your point about innovation, what would be the point of having a central bank digital currency if it didn't change the financial market infrastructure? Like, unless it revolutionizes the financial, why would you bother doing it? We have to have a central bank digital currency, if we're going to have it, that changes things. And we're too old to know, I mean, not Petia, obviously I'm talking about me. I don't know what you're going to do with it. If you're suddenly given, if I'm going to give you all of a sudden a 50 € note that has an API that you can write software for, what are you going to do with it? I don't know. I do know that if you provided that, if you had that level of innovation, there'd be kids in basements somewhere who would think up something amazing to do with it that I can't think of. So to me, the innovation agenda is the dominant agenda.
So I hope we have then time to ask those guys here in the room what they would like to do with that. But let me just come to the other side. We heard about oligopoly of data, what you said, Andreas. You asked, so why for we don't need it if it doesn't change things? Do consumers care? Thomas, you are engaging quite a lot with the civil society. Do consumers care more about usability or about data? Do they care?
I think they do. I mean, everybody pays every day, and we are often faced with this decision. And I do think that actually this is a vital discussion. What is the value proposition to consumers? We cannot solely rely on this is the legal tender, you have to use it, and every commerce institution has to accept it. I know we can make these legal obligations, but if we don't think about the consumer uptake, then ultimately the digital euro will never come to its full fruition. I completely agree with the whole digital sovereignty arguments and also the trajectory towards the Russian invasion of Ukraine. This was a wake-up call. And so it's about time to have this discussion in Europe. I'm very much concerned with the draft legislation that the European Commission put forward last year. Contains this great idea of a digital euro, but its actual implementation is really not where it should be. If we look at the public consultation, we had an overwhelming priority from all stakeholders, including us, civil society, consumer protection NGOs, but also the economics and the industry, that privacy is of the utmost concern. Sadly, nothing in the draft law reflects this priority. And my main problem is that, again, Europe is having a quite siloed debate. If we were to look at the United Nations level debate about things that are happening in Brazil, for example, or in India, there would be the term digital public infrastructure. And that is a very important term because it has this idea of digital infrastructures that are created by or on behalf of a government for the public interest. So we come back again to consumer value. Where is the public interest in the digital euro? And if we were to adopt this now, coming back to what you said, we need money, we need cash. In the draft legislation, we have this distinction between the online digital euro and the offline digital euro. And in the preparation, you asked me, did they hit the sweet spot here? And sadly, they didn't. So in the online digital euro, reducing the complexity in very simple terms, basically down in the settlement infrastructure, you have central servers that know every digital euro that is spent. There is a lot of safeguards in terms of promises not to look, but technically speaking, there is nothing in the legislation and nothing in the rulebook that we see which would prevent the re-identification of any single transaction. And that is not the privacy that I would want from European currency. And there are technologies out there like asymmetric privacy that would give us these assurances. Something like that would be up to technical stacks. It would be modern technology that's not outdated within a few years. And then we have the offline digital euro. That should be the more privacy-friendly version. That should be the cash. But here, the sole security of the Eurozone rests on those tiny chips in our smartphones, our watches, that are already used for the biometrics, for Apple Pay, for Google Pay. And if you talk with the people actually in Google and in Apple being in charge of these technologies, and I do that quite regularly because of my involvement in the digital identity debate, they say there is a market for vulnerabilities, and with 6-7 figure amounts, you can get an exploit. And there are attack vectors that are really worrying, and I would not want to bet the stability of the Eurozone on these secure elements in our phones. I mean, do we really want a European currency where ultimately Samsung, Google, Apple are the gatekeepers, the key holders of our money? I don't think that this would be particularly digital sovereign. So with the offline digital euro, there are really some security concerns that, from everything that I've read, has not been addressed. And ultimately, we need to really get people's trust. This is a currency. This needs to be something that has the absolute trust, not in terms of just its security and stability and privacy, but also for its ease of use. And if we can manage this also in the way in which we talk about this huge project, and this has to happen now when we are still in the process of making law. In a way, I'm happy that we did not reach an agreement in the European Parliament before the election, and that in Council negotiations are also still ongoing, because ultimately all of these safeguards that we as citizens, as users, as consumers rely upon need to be in the law. Only then we can really be rest assured.
Well, quite important topics. Let's get to the second gear of speed so that people can also ask questions and we get to a more lively interaction. We have the, you want to comment on that?
Well, I was just going to say the point about the online and offline euro. Actually, I also want to say you say. I mean, I'm probably the wrong person to, but you say Europeans are concerned about privacy. They're not. They're all on Instagram. They're all on Facebook. If you say to people, "Oh, are you concerned about privacy?" Of course they say yes. And then if you say to them, "Can I have your Facebook login for a can of Coke?" they'll give it to you. So what people say and what they do, I think, are very different. We have to make the privacy. You can't rely on people to do this. We have to create the infrastructure for that. And that's where the online and offline euro comes in. I think the online-offline euro, as it's set out now, is completely stupid. It's a total waste of money. Why build, you know what I mean? Like, why have both of these? That's ridiculous. The online euro that they're talking about is effectively a global pan-European sort of debit card connected to some... It's pointless. The offline euro, if you're going to build something that's going to change things, we should build the offline digital euro and make it work. And obviously I disagree with you about the chips, because I think if it was so easy to attack the vulnerabilities in those chips, then we'd have no phone companies, we'd have no banks already, because it's the same chips that are on your EMV card, the same chips that are in your SIM card.
Well, very good. I think there is one other opponent. So, Andreas, you want to say something?
Yeah, I have a different view.
Very good.
With all due respect. The fact that people in this room are using Instagram and other social media doesn't mean that they don't care about data. We were talking about a public good here at the end of the day. Yeah, and let's don't forget that payments are a public good only if payments work and are efficient. We're going to have a growing and a reasonable society and economy. That's why it's important that Europe thinks about a digital offering of cash and a digital euro, because we are also in competition. I think we're going to come to that. We are in competition with others. We are in competition with China. We are in competition with Bitcoin. We are in competition with all sorts of other offerings. And to give, to open up an offering which helps you protect your data is important. And that's why I would, with all due respect, disagree that people don't care about their data. They do have to have an opportunity to make sure that they protect their data.
Very good. Young generation, what do you think about that? Hannah, Luca, so that starts to be a little bit more lively. Do you care about data, or what do you have on digital euro?
Well, I do care about my data, but I do, in some instance, trust the government with some of my data. For example, in Brazil, we have Pix, which is a widely used instant payment system. it was launched in 2020, and in just 4 years, it is by number of transactions.
By the central bank, right?
Yeah, by the Brazilian Central Bank, sorry. And in just 4 years, it is the most used form of payment in Brazil by number of transactions. And PIX, one of the first things that was announced is that you should not use it to evade tax, because every single transaction is monitored by the central bank. And despite this fact, which was widely announced, widely publicized, PIX is still widely used in Brazil. So thus, I think that consumers do care about their privacy and their data. I do not think that that would be an obstacle to their usage of an instant payment system if it is an efficient system, if it is a system that they trust, because I do believe that citizens do have the tendency to trust their central banks, and which is something that every single Brazilian does every single day.
Well, Hannah, do you think that's the same for Europeans? If the European Central Bank will monitor every single transaction, people will use digital payments, or? What's your view on that? Sorry.
I want to react something you said. You said you don't think that it cares what the customer are thinking because they don't know what it is. But I thought it was quite interesting that then you went about to explain the public what it is. So actually it does matter, doesn't it?
No, I want to try and explain to the public what it is. I don't think the public care, but I'll make an effort to try and explain it to them.
Well, I, myself, the last week I tried to find out what the public, or at least what the young people are thinking about the digital euro. And the discussions, they weren't as fruitful as I thought they're going to be, because it was not a lack of interest, but it was more or less a lack of knowledge. Most of them were asking, well, what is the digital euro? And almost nobody knew the difference afterwards between digital euro and, for example, commercial bank money. And then they went on to ask, well, is it the abolition of the cash afterwards? And I think the EU or the central banks, they really have a lot of work to, there is a lot of work to be done by the EU and the central banks to inform the public, and also because if they don't manage to involve the public, there is not going to be any acceptance of the digital euro in the public, and they're not going to use it in the end. So I think that's the first point. And if going on to the question, if there is any use for the customers, because there was quite intensely discussed in the first round of here. Well, I mean, in the end, the most important difference to, for example, commercial bank money is, I guess, the legal tender status, so that if I want to pay with my digital euro, the people have to accept it and they have to let me pay with it. And if we think about, yes?
I was going to say, that's a Napoleonic view of legal tender. In Anglo-Saxon law, legal tender is different. So, so for example, in the UK, legal tender doesn't mean shops have to take the payment. It just means if you incur a debt, people have to accept payment, but you can't force people to incur the debt. So legal tender doesn't mean that in the UK, shops can choose what they want. If they don't want cash, that's fine. If they don't want debit cards or credit cards, that's fine. That's how it should be, not the Napoleonic imposition of tender choices.
I think that's quite some views on legal tender. You want to add?
Yeah, I mean, it's true. The definition of the legal tender is it's an important one. Actually, it is on the debt side. It's not so much of the acceptance. But I wanted to come out to Hannah and say, what is the difference between a digital euro and a euro that is being paid digitally? And David actually went in this direction. But I think it's important to go back to first basics and understand the difference between the digital euro and a euro that we use every day digitally, and that is that the digital cash is guaranteed by the central bank. The money that we use digitally every day is only partially guaranteed, is not fully guaranteed. If you take a note out of your a cash note, any banknote, open up your wallet, take out a euro note, and you are going to see a signature on it, a signature by Madame Lagarde. It's a contract. You can present that paper to the central bank, and the central bank is obliged to give you the value of the note, the face value of the note. That is now in digital form with the digital euro will be fully guaranteed by the European system of central banks, right? Whereas the money that we have in bank is not fully guaranteed, is only guaranteed up to 100K, which is the deposit guarantee. This is an important difference. Hugely important difference, because you could argue, well, okay, then maybe I shift all my money from the bank account that I have now to the digital euro account that is fully guaranteed. Yeah? But the ECB has told us, well, you can only shift up to 3,000. You cannot have more than that in your digital euro account, right? Because if you were to, and by the way, the digital euro account will also be compensated, whereas when you have money in your Austrian bank, you actually are compensated. You get an interest on it. You will not get an interest on the digital euro because it is cash, just like the cash that we have in the pockets, that we don't get an interest on it. It will be exactly the same thing. I think it's important to understand the difference. It's a very primal difference, but it is an important one. And Hannah, I hope I answered your question about the differences between the digital euro and the euro that we use digitally. Have I?
I don't know, Hannah, it feels better. You understand now what it's about?
Have I answered your question?
Yeah, okay.
Because you asked the question.
I just read a report yesterday from the Reserve Bank of Australia. So the Reserve Bank of Australia did a detailed survey of consumers about this to try and find out, and basically use a pricing mechanism to try to find out whether consumers cared about these things. And I can tell you absolutely, consumers do not understand the difference between commercial bank money and central bank money, and they have no interest in paying a premium for central bank money. And when you think about it, it's logical, because most consumers don't have enough money. But they did. They were prepared to pay a premium for privacy. And I thought that was quite an interesting finding. So in terms of the difference between a euro and a digital euro, the privacy, that mattered. Everything else didn't matter. I thought that was an interesting finding.
I would like to give the opportunity of people in the room, if they have questions, also to address that, because otherwise it may become a little bit of distracted conversation. So if you have questions, please raise your hand. I see one over there. Okay, I see a few questions. Yeah, okay.
I can't see anybody.
Lots of questions, wonderful.
Yes, please, the gentleman, I hope. Yep. And then here in this center, yeah.
Yeah, hello. My name is Mark. I was wondering what this switch towards digital currencies will mean for taxation. Will taxation become more efficient because of this, or will it pose some challenges? I would like to hear your thoughts on that.
Yeah. Maybe collect 2-3 questions and then we answer them, because I saw quite some time.
I have no question. I just want to say thank you. You made an incredibly boring topic very exciting.
Thank you.
And we have only started.
Hi. Why do you think I should use digital euro instead of my MasterCard or Visa?
Okay, taxation.
Shall I?
Yes.
Yeah. You can use whatever you want. You should have the option to use whatever you want. And if you care about, the acceptance of your digital euro, you can do that. If you care about your data, you can do that. So it's coming back to my argument of a public good. Yeah? And that is your choice. It's not the entire idea, that's very important to me, of the digital euro is not to crowd out others, but to complement. So it's not going against other means of payment, which can exist, and MasterCard, whatever, Visa is another one, but this is an additional cash option which is presented to you, and you can take it or you can't take it. And Maria made some statements earlier on how much this will be accepted and what that means and whether that will then be a failure or not. But it's not meant to stop innovation. Innovation can happen at the same time and continue. You can. I predict we're going to have fintechs developing optionality on those digital euros, which we don't have right now. So this is my answer to your question.
I think these questions are the same question.
Yes.
You know, when you use your Visa or MasterCard, of course, it's great. I use mine all the time. It's a tax. When you use your Visa or MasterCard, you're paying a tax. They're not free. Well, you think Visa is a charity? It's like UNICEF or something? I mean, it's like you're paying a tax when you use it. And that's fine. I'm happy to pay that tax. I like it. In terms of whether digitization will make any difference, I can see scenarios where it would make it more convenient, but honestly, I don't think it will make that much of a difference. I can tell you, if we don't have a digital euro, then you'll find tax collection will be impossible. Because if we don't have a digital euro, everybody will use a digital dollar instead, and then you've no chance of collecting any taxes.
I think
from a consumer
you're better
perspective.
to answer the data.
Yeah. So we're actually in agreement with BOIC, with the EU-wide consumer protection body. So we like the idea of the digital euro, but right now there really isn't a stable consumer value proposition. So you're asking exactly the right question, and we should all pose this question to EU lawmakers. There's still time because the negotiations are ongoing, but for the baseline, you know, from a purely human perspective, it is important to know that besides the digital euro proposal, there is also another law in that same single currency package called the right to cash. And both of them are tied to the hip. Hopefully both of them will come through. And the right to cash is actually hugely important because it will prohibit no cash-only card signs all across the EU. If it's gotten right, then you will have a greater choice of payment methods. You will always have the choice to pay with cash, to pay with the digital euro, and existing digital euro payments. So like you could have Visa, MasterCard, Apple Pay, Google Pay, but then also these two official forms of payment. And that actually is a quite important value proposition for the consumer because it then gives you agency. And similarly, what I really like as a privacy activist in the right to cash proposal, we are now in a rural area here. In many rural areas in Europe, I mean, Austria is a little bit of an outlier here, access to cash is a huge problem. And this regulation would also oblige member states to have cash available also in rural areas. So there must be ATMs everywhere. And that is also, particularly for an older population, looking at the digital divide, an enormously important step for their inclusion in society.
Maria, if you want to add something shortly, because I want to come down to the competitiveness.
Of course,
see whether we can make of this.
I mean, maybe I'm repeating myself, but I was trying to make the point that we don't have a clear answer to your question, and that is a gap, a communication gap. And I mean, you've heard it. What I was trying to add to this in order to close that gap is that you have MasterCard, Visa, Google, Apple, none of this is European, and that makes us vulnerable. That's the argument. Now, you and I shouldn't care about that. We just pay a fee and that's it. But the policymakers, the central bankers, need to worry about this in a context of a geopolitical tensions, because if one day everything is switched off, then you cannot use any payment system. Do you have an alternative? And the answer is we don't. So that's the vulnerability argument, which is not a first-order problem for you and me as a consumer, but should be a first-order problem for the policymakers. And I'm looking at Petia because she is the director of payment system. Yeah, I think that's the argument I was trying to make. And we should. If we use a payment service, just like for anything that we buy, we have a cost for it, and competitive forces are going to keep those costs low. The digital euro is not for free, it is the taxpayer who's paying for it, and I want an answer to the question, why should it be the taxpayer paying for this, and not some private solution, a European private solution? Why do we need taxpayer finance such a project? As an answer to the question, it says, okay, no, the digital euro is an answer to that. No, not necessarily. I would like compelling arguments why we don't allow the markets to provide solutions. And I think here what Petia will say is that, well, we provide conditions for innovation to happen, such that public, so private innovative payment solutions arise. And I think that's what you guys are aiming for.
So now we get a lively discussion. That's excellent. I see there is a question. I see there is... We take this question and two more, and then I'll let you intervene.
Yeah, thank you. I have a question for Thomas. Thomas, where do you see the rights of the merchants who decide to say, I decide to only take digital payments, not cash. I want to have less risk of being robbed. I want to pay less in cash management. I want to help the environment not to print potentially in the view to digital receipt. I believe that I want to have my customer having their payment traceable, or hopefully they will pay taxes as much as I do, so my taxes overall goes down because no one is doing cash anymore. So where are the rights of those entrepreneurs who try to make these things better? Where are those rights? I think they're rights on the individual, but if I want to buy a sandwich, and this guy only accepts car, I probably find another sandwich place over there.
Yeah.
But I think there is a right of the entrepreneur able to say, I want to run the business the way I want. Where do you see those rights?
Let me just collect one more question, and then Thomas, I'll let you answer. And then you can answer, in addition, this one, yes?
So actually I have not just one question, I have three questions.
Okay.
The first one is, how do you want to guarantee the digital euro? Is it backed up by a note, like a euro note, or is it backed by digital money? Or is it backed by gold, like back in the days where the dollar was backed with gold? Then there's accumulated to this question is the digital euro infinite, or is there a certain amount? And the last one, due to privacy reasons, is it like blockchain? Actually, everything is secure, everything is open for everyone. Everyone can see who gets money, but at the end, nobody knows it because it's just going to a private key and the holder is anonymous, because that's also the reason why many people are against it, because not everyone wants others to know what they're earning or what they're getting.
Right. Thomas, you may start answering the question from Mauricio Preto, and then maybe taking one of those. And I think, David, you want to complement also for the blockchain thing. We may bring a little bit of, and then I come to the central banking. Next one, yeah.
Yeah, happy to. Yeah, I mean, it is a great question. I mean, I represent human rights consumer interests here. So there hopefully will be merchant associations also being in the EU debate with their positions on exactly those questions. From a consumer perspective, I think giving people options, and particularly having options that are privacy friendly, is vital for participation in society. And right now there are actually no privacy friendly digital means of payment. As we heard, most of them are American. And it's very hard to see if you are part of a marginalized community, if you are in a tough situation, probably buying pharmaceutical products that only the fact that you bought them or that you are at a certain space reveal critical information about you. I think it is important to have, as horizontal protections, means of privacy-friendly forms of payment. We already live in a world where transactions above a certain threshold cannot be done anonymous. So even if you do pay with cash, there will be a KYC requirement. The consumer, the buyer, will be known. So I feel that this is a due burden to be put on physical commerce, to still have cash around, also as a means of looking at the older parts of our society, having them still included. I know that my grandmother still has problems, even with cards. So I feel like that there is also an equitably and inclusion argument that we should be mindful of. I know that there are also costs attached for businesses to handle cash, and certain risks in areas too. But nevertheless, I feel like from a government perspective, in the EU, where in most areas, thankfully, crime is not so rampant that a day's business in cash is not something that puts a target on your back, is something that is an equitable trade. But again, the legislation is still up for negotiations. We still have the important votes outstanding in the relevant committees in the European Parliament, and I'm looking forward for exactly these debates to happen. And lastly, one other thing, just to bridge the debate, I would love to have more merchant perspectives on the digital euro as well, because their regulated fees, and we discussed this earlier a few months ago, Petia, that is actually trying to get the merchants on board with the digital euro by regulating the fees so that it is competitive with existing digital payment options. So I would love to have that debate also much more public in the open. And then about the other question, the architecture of the digital euro when it comes to the online form is nothing like blockchain. It's basically one big settlement infrastructure from the ECB. There is no decentralization. There is no transparency. We would wish for more open source and accessibility, particularly when it comes to standards. Maybe also if it comes to protocols, if we think that digital euro could be a global platform for other regions to also interoperate. And if we look again at the UN discussion around digital public infrastructure, transparency, open source, open protocols are key requirements there. And this debate simply is not happening in Europe.
Just a short comment, and then I want to pass here the question on the backing by gold, or how it is treated as money or not.
Yes.
So just two points, really. So first of all, Thomas's suggestion of forcing merchants to accept cash is a communist imposition on private contract between customers and merchants, and it's outrageous. And if the government says that, I agree with you, if the government says that merchants have to accept cash, then the government should pay them to do it. If we consider it social policy that merchants should accept cash, then the government should pay merchants to do that. They should not expect merchants to do that for free because it's expensive. And I agree with that. And also it's expensive for everybody else. Every day, particularly in the Netherlands at the moment, every day an ATM machine gets blown up, you know, and all the money gets stolen. And that's an externalization of the costs on everybody else because the shop that gets blown up has to pay for, or their insurance company. It's not as simple. And just to make a second point about this, and I know this isn't what we're talking about today, but access to cash is one of those things that sounds good. Like it sounds like you're doing a good thing, like let's make sure everybody can have cash. It's a really bad thing. People who are trapped in the cash economy are the people who are worse off. They're the people who have to pay more for everything. They're the people who their money gets stolen. They're the people who get shaken down. Their money gets lost. They have no... If I drop my wallet walking down the street, I don't care. I don't care. I have money. You know, the bank will give me new cards. If you're poor and you lose your money, it's gone. You know, the idea that cash is a good thing is just wrong, and people say it like it's a good thing. You want my favorite cash statistic right now? The Bundesbank's own statistics. 9 in 10 of the euro banknotes that are produced by the Bundesbank are never used in transactions. Not rarely used in transactions, occasionally used in transactions. They are never used in transactions. You're printing banknotes that go straight under drug dealers' beds. You're subsidizing the criminal community for no benefit to the marginalized and less well-off communities. This thing about access to cash really bothers me. It's not a good thing.
So now you see...
Thank you.
So now you see that we're really in Alpbach, because otherwise, imagine a central banker inviting this guy. So we are for open conversation. So let me just answer the gentleman's question, and I come immediately to you, and there is a few other questions, and then I want to come back also to my fellow students here on the floor. So Maria and Andreas, please.
Yeah. Yes. So, I mean, okay, if I allow me, it's so tempting to talk about cash, but I mean, like I said, nobody's more surprised by seeing how much cash is still being used. 50% of our transactions are still done in cash. So, you know, you would be forbidding...
small transactions.
Small, well, actually, yeah, but even the amount is a bit less than 50%. The statistic is shocking. These ECB numbers is pretty shocking. So, you know, you cannot exclude the need for cash. Sweden experimented with getting rid of cash completely. They had to come back from this. They reckoned that they need about 10 to 12% of transactions will have to be cash. Sweden, the most digitalized economy. So, I mean, I don't like it. I don't use cash, but I think we need to understand the needs of the consumer there. I wanted to maybe come back on the questions on the digital euro is backed exactly the same way as the actual euro. We are no longer in the golden, in the era where money is being backed by gold. This was eliminated in the 70s. We are now in the fiat money economy. That actually is exactly the same as we do with cash economy. The digital economy, the digital euro is not infinite, just like money is not infinite. There is in fact, the supply of money is very much regulated in order to meet demand. That's what we call monetary policy. Because if it was infinite, based on the issue of scarcity, the value of money will be zero, right? I mean, so that the management of the value of the currency is something that is in the hands of very competent central bankers, and they are the ones that regulate what that price is. And I wanted to make a very important point, and thank you for a question. Anonymity is not the same thing as privacy. The digital euro strives to be private, and I hope we get there, but it will not be anonymous. And in that respect, the digital euro will not be 100% a replacement for cash, because cash is anonymous, whereas the digital euro will not be anonymous by construction. The ECB is very clear on this because of the issues of rogue activities. They will not want any digital euro transaction to be anonymous. It will be eponymous, meaning that you could find out, although they will not have access to it, it can be found, it can be traced for this. So in that respect, it's not 100% substitute for cash. It's 98% substitute for cash.
Andreas, please.
Yeah, we have a very good discussion. I think I'm not going to kill it, but I do want to say that nobody in this room should get the impression that the digital euro is a fait accompli. Yeah. It is in an implementation phase. So it's in a phase where people are studying at the ECB, how can we implement it? The rule book is not even written yet or fully published yet. So we are still in a position, and that's why I liked your comment, that also with regard to your question of the merchants, things can still be changed. So we have a year-long process of implementation, and the final decision on the digital euro is not taken. The way we are discussing here is as if we already would have the digital euro. We're not there at all. This is still a process, but it's needed to have a discussion like this, as we can see by your question, for example, which is an absolutely fair question, but we are not there yet. And it's my understanding that the most advanced country is China on this. And when I speak to people who I'm not going to disclose now, they're telling me that the People's Republic of China is having quite some issues and challenges in implementing a digital yuan. So it's nothing which is going to happen tomorrow, but we need the debate.
Well, so I had this gentleman over there. He tries to get, then we give the group there to ask the question. And yeah, a lady, I have to take a lady. So the lady gets the third one, okay?
Hello. The whole subject is a conspiracy theorist dream because all the suspicions you have versus the states or the ECB are there. And let me ask as the devil's advocate a certain question. Why is it set up in a way that there is questions for the public if this will be a way for the states or the ECB to have the hand in the pocket like the ECB needs money and we just withdraw it from your wallet, or we want an extra tax and we just take it from there, or we give you no other means to pay things in your everyday life, like buying a car or whatever. So I live in Italy, and in Italy it's legal to pay €1 or any amount of money with a card, because for taxation they prefer that it's public or it's open. And the next step would be if the euro, the digital euro transparency or the privacy is so small that the state knows all the transactions and knows exactly who has which amount of money and put it to who. This is a dream for having a state that is controlling the public entirely, while a lot of people in the public have the feeling that as long as I have cash and I can store it in my bed, that's some kind of privacy and protection against the state. How would you counter these statements? Thank you.
So we collect the questions over there, and then the lady, and yeah, go with you next round as well. Yeah.
Speaking about the advantage of the digital euro, I guess we shouldn't focus on the consumer side. Banking and car payments are basically free for consumers. Shouldn't we focus more on the merchants? Because since digital euro payments shouldn't incur any fees, any acquiring fees, we are going to push out Visa and MasterCard of the European market. Wouldn't that create the advantage you're looking for?
Thank you. And the third one, and then we distribute.
So thank you so much for this discussion and for kind of explaining the difference between electronic money and electronic cash, like where it lives and where it flows between. My question, I think, is more like a technical, I think, possibility. Is it possible to incur debt on your digital euros? Like something like a credit card? Like, I don't know if a cash credit card is kind of like a contradictory term, but is this something that could be potentially possible?
No.
So he started.
Oh, sorry.
Okay. Yes.
No, please.
So, well, maybe we start firstly with the conspiracy theory and the topic of programmability, if I understand you correctly, and then we go through to the yeah.
No. So the conspiracy. By the way, I have a much better conspiracy theory, which is what I tell everybody, which is if you look on euro banknotes, they all contain a unique number. And every time you go to the ATM reads those numbers and reports them to the Bavarian Illuminati. And when so no, if you want a conspiracy, I have a much better conspiracy theory.
Yeah.
But in Italy, it was the coalition of small business owners who were campaigning against that law. And in fact, they almost got it passed. And the reason they wanted to stop that law was for tax evasion. Now, I think tax evasion is a bad thing. I think we should have schools and roads and services. And, the idea that, it's kind of cool, we can use it to avoid tax, I disagree with that. That's a bad thing. The reason I pay so much tax is because half the economy pays no tax. If we were able to tax more fairly, we would all be better off.
But we don't. That's a matter of the ministers. I guess they will come next days here. So we are not going into fiscal policy.
Okay.
We stay on the military.
Should I say
no fiscal policy?
Maybe we come to the debt, and then we come to you, Thomas. Yeah.
I'm not an expert in conspiracy theory. At the end, it comes down to trust. And that's why I introduced the issue of public good. Yeah, and you also have to have trust in your bank. The bank could do exactly the same, what you just, in theory, of course, and in practice, what you just suggested. So it comes down to who is your, relatively speaking, most trusted partner, and what is the incentive system of that partner to do what you didn't imply it, but you just formulated. And that's why I think I come back to Mr. Lohninger, who said that at the end of the day, for him representing civil society, the state, and the ECB is representing the state in a very narrow part of it, which is monetary policy, including central banking activities, including payments, would be, the most trusted partner. That's the same thing with the value of the banknote. The banknote is maybe worth 2 cents, and it has, let's say, 200 euros written on it, and you have to trust that everybody will honor 200 euros on this banknote, regardless whether or not it's signed by Madame Lagarde or Jean-Claude Trichet or Mario Draghi, to quote a fellow man from Italy. So this is at the end of the day not very difficult to answer, I think.
Okay, before I pass you, I just answer very quickly the debt thing, because I think we will lose it up to the end of this round. It's cash. So basically, as you cannot get indebted by using cash, it's the same for digital euro. If you have it on your wallet, you can pay with that. If you don't, you basically cannot get in minus in digital euros. That doesn't work like that. So, but I hope that's answered your question. I try to be moderator. So, Thomas.
I think it's exactly right to have the whole debate about something as vital to our society as money be seen in the context of where we are. Actually, one of our main concerns when the Commission proposed this draft legislation in 2023 was that this could become a festival of conspiracy theories around the EU election from right extremist parties. And given the majorities that we have in the European Parliament, I think this is still something to be very mindful of. And there is a reason why the digital euro was proposed in a package together with the right to cash proposal. Because any sensible politician would see that you need to take people's fears seriously here, and that we do have a legitimate expectation of privacy. We do have a right of our anonymity, not just privacy, and that's why the right to cash proposal is vital. And honestly, tax evasion, yes, that is a problem, but I would point to things like the Cum-Ex scandal, where we had a very similar problem on a much bigger scale, where I would like to see the type of investigation that we see with small money, blue-collar crime. So actually, the voices that are now calling for privacy are not just NGOs like ours who are small. We have the biggest consumer protection NGOs. We have the board of all data protection regulators, the EDPB, saying stantly, this is not good enough. So we either take those voices seriously, or we will have a proposal at the end where people will ask exactly the same questions. And I can tell you, these EU proposals are really good at being debated isolated. But sooner or later, they will hit the public. And then these debates will become very loud. And we have seen it before. Trust in Europe is the currency that's most scarce. And so we really have to be most mindful of that.
So,
can I just ask the lawyer something? Because
yes,
I
would like to involve
I just want
them.
legal clarification on something, if that's okay. So, the right to privacy is part of the European Constitution.
Charter of Fundamental Rights, yes.
But the right to anonymity that he talked about, where does that come from? Well, he said there's a right to anonymity. Can I just take legal advice on this? Is he?
There's an expectation.
Okay, just checking. So I tell you right now, anonymous digital money is a catastrophe. There is under no circumstances should Europe allow this to happen.
That's why...
If other countries want to go down
I'm interrupting you. What I
not in
argued for
Europe.
was asymmetric privacy.
Exactly.
You could have all of your anti-money laundering, anti-terror financing obligations fulfilled with the payer still being private, only the payee.
No, I agree with privacy is...
There are things,
but anonymity-
technologies are out there to solve these and square these circles.
Excellent discussion. So we have a lot of questions. I have one
Can we have some
outstanding...
less controversial questions, please? Because we're trying to be more friendly up here, you know? And you guys, you're rabble-rousers, you know?
Conspiracy is kind of controversial,
Yeah.
I would think. Yeah.
I ask a common question for everybody, just in a second, but let me answer the one on merchants, why we don't incentivize merchants. So maybe, Maria, you can do it very quickly.
Yeah, I mean, look, I mean, there is, if you provide a service, there is a cost to it. And the question we can discuss what that cost is, and I would argue the market is in much better position to keep the costs down. And if you were, and I was trying to make the point earlier on, that the digital euro also has a cost. Maybe you don't pass it on to the entrepreneurs, but there is a cost, and the cost is to the taxpayer.
But the market can't determine that price correctly at the moment, because under the current construction of the digital euro, and I know these things are all fluid and so on, the merchants aren't allowed to hold the digital currency. So when you pay with the digital euro, under the current regulations, the merchant is forced to pay that into a bank account immediately. They can't hold the digital euros and use it to pay their staff salaries and that kind of thing.
But it's the infrastructure
right
I'm talking
now,
about, yeah? The infrastructure. You need to hold an infrastructure to accept digital euros, right?
But you don't have a marketplace that can set that price correctly. If the merchants were allowed to hold it, so if the digital euro transactions were free, which they should be, if the merchants choose to hold the digital euros to lower their costs and pay staff and wages and that kind of thing, they should be free to do that. At the moment, they're not allowed to do that. At the moment, they're forced to deposit the money in a bank instantly, which is wrong.
There are quite some other views on that. So let's get into that. So
and this is why I said in my opening statement, it's very important how you calibrate the fee schedules. That's exactly what you are talking about.
That's right.
Yeah.
I see a lot of activity and questions, but before we go to you guys, I just want to give back to Hannah and Lucas, who are listening to our lively debate here, how it feels for you. So do you really get answers, or you get more questions? And if yes, which would those be? Huh?
Well, I mean, there are many unfinished sentences because of a lot of interruptions. But what I wanted to say earlier and to finish, I think that for the consumer itself, I don't see the big difference. I think there's more of a convenience which is coming with the digital euro, because then you can decide if you want to pay with cash or with the digital euro. But to be honest, I don't think with the consumer, I mean, you can argue that we all think about privacy, and in the end it's important, but I don't think that if I pay with Apple Pay, why do I do it? I mean, if I care about my data, I wouldn't do it, but I still do it. So, and right now we have already the possibilities to pay digitally, and maybe at some places like the farmers market we can't, and with the digital euro we probably could. But that is nothing that couldn't be changed with the existing law already and with commercial bank money. And that's why I'm also wondering why we are discussing that much about the consumers and not about the wholesale and the merchants more.
I think the wholesale...
Okay.
Oh, sorry.
Give him the chance, and then I will collect the questions, and then we do a final round. Yeah.
Thank you. Well, I would like to address like the thing about the costs of implementing this digital payment system. In Brazil, PIX is free for people, like physical people. So much so that the most common transaction on PIX is 1 cent, because on PIX you can attach a message, so you can send a PIX to your ex saying, hey, you forgot to block me here. Not only, and for business, it's actually a really cheap transaction. They pay a marginal tax, which I think is like 1/10 of what you pay on, for example, credit card transactions, which also actually sometimes reverts to the customers. In Brazil, it's really common for like stores to offer you a discount if you pay on PIX.
Yeah.
But I also have a small question that I would like to address specifically Maria. A lot of talk about the risks and the tensions caused with the rise of central bank digital currencies. There were talks about how that might pose a risk to the dollar, a smaller risk to the euro, sovereignty questions regarding Europe's network. So I would like to ask, how do you see on the positive side, the positive possible implications of these central bank digital currencies on the international scenario?
Oh yeah, absolutely, and sure. Thanks for the question, because that's we should have that too. First of all, the countries that already have central bank digital currencies, there's 3 or 4 in the world that actually have operational CBDCs. The motivation for the central banks to create a central bank digital currency was something called financial inclusion. They wanted to make sure that vast percentages of the population have got access to digital payments. In Brazil, they didn't create digital currency already, because PIX actually did that solve that problem, the problem of financial inclusion. So I think it is an enabler for including people in the digital sphere. Well, I mean, there are problems to be sorted of with there, particularly in countries like Ghana, which actually has it. But digital penetration is small, so you can't really provide that access. So I think that's an important, clear motivation that has got very good social implications. But I wanted to, if I may, I wanted to just add that on the wholesale, because we haven't really talked about the wholesale. On the wholesale, we see that a central bank digital currency payment system, so the infrastructure, is going to bring huge benefits in terms of time savings and cost savings. And this is why I think in the Eurozone, we need to actually talk a little bit about the digital euro in the context of the wholesale, not just on the context of the retail, because there are huge benefits to be had that the BIS has already demonstrated. However, I will say, one of the biggest problems of implementing international CBDCs is going to be governance. The trust element on the international financial system is so important, and not just on international, on domestic as well. What legal framework would govern sort of a wholesale CBDC is going to be a difficult problem to solve. But if it were to solve it, they could have huge benefits.
And the governance, as Maria rightly says, I think, depends on the regulation. Nobody likes regulation, but at some point, regulation is helping you to fully understand how the governance works. Now, where did this debate about the digital euro start? It really started when Facebook had this idea of introducing an own currency, headquartered or issued out of Switzerland. As you will remember, it changed the name several times. And it really was a totally ungoverned, unregulated entity with a lot of users. Yeah, many users. And so that is really where you have to think about the sovereignty of your own currency. Do I want to allow that in a changing consumer behavior, or do I want to have an own offering? And that's why I think there is a good reason to think about digital currency.
Can I just disagree with Maria for a moment, because it's fun. So I disagree slightly with that formulation, because I think certainly in the case of the biggest, which is China, China already has an effective single market. They already have WeChat and Alipay. They already have, cashless. I think you can
but
make
the African countries actually are very clear on this.
Yeah,
financial inclusion was the motive.
But you can make a reasonable case.
Conspiracy theories in China, we can react.
Yeah.
I have some great conspiracy theories about. No, but the point is, I think a lot of reasonable people who know more about this than I do. I read a lot of commentary about this. China is looking along the Belt and Road. The reason for moving to the digital yuan is not for domestic consumption.
No.
It's to extend. So it's to create a single currency for the Belt and Road, essentially.
Yeah, but Nigeria, Ghana.
Well, in Nigeria, it's been a complete failure.
Yeah, but the motive.
But also in Brazil, it doesn't. How does it fix financial inclusion in Brazil?
Yeah.
Because to use PIX, you have to have a bank account, right? Yeah. So.
Excellent.
We don't want people to have a bank account to use the digital euro.
No.
So it could do something about inclusion here, but PIX doesn't do anything about inclusion in Brazil.
No.
Keep your mind for the last round. So we give a couple of questions here. I see very motivated people. So a lady over there. Wow. Gentleman, I hope. Yes, over there. So there is a very intensive. You managed to get the mic. So we collect a couple of questions, and I will embed them in the question for the last round, okay?
Yeah, sorry, but I was already longer in line. I would like to ask, is there a vision also to become a stable coin in the crypto markets? I know that the current decisions, they really do not make it easy, but I think it would be a good idea to have some safe and regulated entry point, and also a safer place to park the cryptocurrency into digital euro. And maybe it could also be a good first-hand experience how to collect some data about what's going on in the crypto markets, and maybe to understand and better regulate the good things that are going on there for the society.
So, the gentleman, you have mic already?
Yes.
Sorry, I don't see that.
Thank you for the question. But then they have no control, so about their money. No, my question, Mr. Birch. You made a very exaggerated argument, so I'll take the liberty of provoking something. Everything is about trust. 90% of debt affects gross-domestic products in Europe, 130% in US, 230 in Japan. It is not backed by anything. Money is printed out of thin air. And these central banks should we trust? First question. Second, cash is the last good of freedom. And you just said that CBDCs will not be anonymous. In other words, total control of the new CBDCs and the people. Are you sure people really want such a CBDCs like this designed?
Can I answer, please?
We will answer that question.
Get in line for answering this.
Yeah, absolutely, absolutely. We take this one as well.
Hello. So far, the discussion mostly focused on consumers and a bit of merchants, looking at a financial system as it may have been 10 years ago or so. And I think looking at timelines it takes to implement, it would be much more interesting to hear a few of your perspectives on, like, think of an economy in 10 years where most of the transactions are between different robots, providing some microservice on the internet or in a physical world, where it's really micropayments, billions of micropayments every hour between lots of very specialized small bots doing all sorts of tasks for each other in a decentralized network. I would like to hear a bit more views on that, because I think that's the primary application of the digital currency. And coupled to that, maybe from a few of you, what are your timelines on estimating, what's your 90% confidence interval, so to say, when such a currency might be realized in Europe?
Okay, and so the very last question, then I will streamline them. I will try, there are so many hands. I think the guy with the blue was, I'm sorry, I have to, yeah, it's you. Yeah, you won the battle for us, the last question.
I mean, I'm sorry if I took someone's question. It's really short. I would just add on previous what has been said about the privacy. Would it be technically possible for this retail CBDC that's like cash-like to be censored, basically? Because if I have my cash in my wallet and give it to someone else, it cannot be censored. So would it be possibly censored technically, from technical perspective?
Yeah. Okay. We will have the opportunity to talk after the panel, so I'm sorry for that. I need to make a cut. So give the opportunity to everybody to have his final words. So maybe we can start from left to right, and Lucas, Hannah, feel free to add your perspective as well. And we start with the questions on the rights and whether that will be censored and so on, and go forward to the future of the market and how we envisage the future financial system, robo-advisors or robo-transactors and microtransactions here. So let's do so. Lucas, you want to?
Well, I think that the question, especially surrounding privacy, is that I also would agree with Mr. Birch on the fact that anonymity is dangerous. Anonymous cash is like physical cash is anonymous, and it can lead to problems in like corruption. It's easier to pass someone a bag of money. In this sense, I also do agree that total anonymity on a digital currency setting could have very dangerous consequences. But I do think that in the end, it's a matter of trust in the government, as was said before. If you have a totalitarian government, I don't think that an anonymous digital currency would even be considered or even be plausible. So in this sense, I think that if you have a democratically elected government that has in its interest to not only diminish corruption, but also preserve its citizens, I think that both things can be accomplished. You can have, if you have trust in your government, you can have both. You can have both a non-anonymous system, but also one that does not violate completely your privacy. So those would be my considerations. And thank you so much.
I'm also trying to be brief. So in essence, let's start with the baseline. The payment layer in digital public infrastructure is, according to UN Development Program and so many international agencies, the prime leverage we have for financial inclusion. And we see this in many pilot projects all around the world, that the billions of people who are left outside of the finance sector could really be helped with that. So this is the baseline of what we should strive for. And there's a lot of ongoing efforts where we should pay more attention and link our existing debates to those efforts. Because ultimately, the digital euro wants to be interoperable, so we will need to think right now already about some form of multilateral governance and the interoperability. This should not be an afterthought. And then lastly, we now have 2024. Realistically speaking, we'll have the digital euro at the earliest, I would bet 2028, probably later. And so that means we need to think already about what are the pitfalls. Of course, totally unregulated payment systems like Bitcoin were the reason why we have ransomware these days, why hospitals, private businesses, and so many individuals had suffered from extortion. So we don't want completely unregulated cash. But that's not the proposition here. We do have the technologies like asymmetric privacy, like low-value transactions that are anonymous, and these are things that are on the table that could enhance the security, at least give legal safeguards that the users know when their privacy will be respected and when it will be broken under a rule of law principle. That would be a good European answer to debate where we are at right now.
Hannah, you want to add your perspective?
Well, I think I'm going to use time to answer a question you asked concerning the timetable of the regulation. Last year in October, he already said the Commission drafted a proposal for the establishment of the digital euro, and right now the negotiations are going on in the Council. And as far as I remember rightly, by the time of 2028, if everything would go smoothly, they would love to introduce the digital euro, but until there is no legal act, yeah, everything is open-ended. Yeah,
I can confirm that. Thank you for adding that perspective. David?
So 3 questions. So first of all, the question about stable coins. Actually, there's a very good example of what will happen. If we don't do something, you're absolutely right, people will go to stable coins. And actually a very good case study of that is Turkey. If you look at the Turkish economy right now, about 4% of Turkish GDP is already going into stable coins. And those stable coins are, of course, US dollars. If you don't provide an alternative, most people in most of the world, most of the time, want dollars. And they will use dollar stable coins to the exclusion of everything else. So you're absolutely right. Stable coins are a really, really important part of this discussion. Your point about the robots. If you look at the responses to the ECB consultation on digital euros, by far the best response, in my opinion, was the German Banking Federation. The German Banking Federation is you know, it's literally the most conservative organization on earth. It's the Landesbanks, and they're very conservative people, the German Banking Federation.
Don't look at me.
Yeah. You need to back me up. They are very conservative people. They're not crazy techno people. And they said we need 3 digital currencies. They said we need wholesale digital currency, which is an absolute no-brainer. And actually the Bank of England's response to that, which is what we call the omnibus accounts, is a very sensible way forward. We know what to do about wholesale. They said we want a retail digital currency, but there's no burning platform. We don't need it tomorrow. But it needs to be thought through. But they said the priority is the machine digital currency. They said because of Industry 4.0, and making supply chains more efficient in Europe, they actually said machine digital currency is critical to the future of Europe. I agree with that completely. And particularly because the different machine currencies used in different supply chains don't have to be the same. And that opens up many new possibilities. And finally, the point about cash being freedom, I think that's completely bogus. You live in a society with mobile phones and digital cameras and you're logged onto Instagram and whatever. The cash is freedom thing is it's a teenage angry white male pseudo-libertarian California. It's not real. Have you read Umberto Eco? Travels in. You must have read Eco. Travels in Hyperreality. He warns about he calls it the dangers of being nostalgic for Disneyland. This cash is freedom thing is a peculiarly American dynamic. It's a misplaced mimetic echo of the Wild West. It's a romanticized version. It has nothing to offer us. Cash is not freedom.
And because we are coming to the end, I want to give some space for my two other panelists. So, Andreas,
I'll be very quick. 3 questions I'll pick. First one is stablecoin. And you've been waving, so you deserve an answer. Who is going to invest in stablecoins once we have digital currencies? That's the thing to really think through. I'm not so sure. The business model of the stablecoins will partially or mostly fall away. Second question was, how long is it going to take, and when will we see a potential digital euro? The central banking community pays a lot of attention of saying we need to be independent. But in this case, I think, the introduction of a digital currency, you have to do this with the publicly elected policymakers together, which is, for me, very difficult to predict when these decisions will actually be taken. So I think at the end of this decade, beginning of next decade, we could see something evolving. The third and last question I got in line to answering this was, how can we trust central banks when debt to GDP is at 230% in Japan? I have had the privilege of representing the Bundesbanks, and we always made the point that we don't want fiscal policy and monetary policy to be blurred. This is what's happening in your question. Of course, the central bank didn't make the decisions to have 230% debt to GDP in Japan. That was the government, freely elected by the wonderful people of Japan. So the Central Bank of Japan, I have to say, the trust in the organization of the Bank of Japan has nothing to do with the decision of the government to issue all that debt. That's why I think we need to make distinct differences between fiscal policy and monetary policy.
Yes.
And why your contribution is absolutely essential when people ask this question. Yeah. I mean, just to add, an overarching perhaps comment that no institution, no country is stronger than its institutions and its governance. If you have no reason to trust the governments that we have now, you will not. If you don't trust the euro, you will not trust the digital euro. But if you have some trust in the euro, I don't see why you shouldn't be trusting the digital euro either. I will say, however, one thing: the process of digitalization has meant that problems proliferate much faster than if you were in a system that was not digitized. And therefore it does merit our attention to be there and carefully monitor what happens in a digital world differently than in an analog world. But when it comes to the value of the thing, which is what we're talking about, it's all about trust. And how you generate trust and how you preserve the trust relies strongly on the rule of law. And this is why the rule of law is the most important aspect in any of the things that we are discussing here. Lose the rule of law, you lose your trust.
Excellent closing words. We are above time, so I had decided to stop it here. Thank you for bearing with us. It was a great discussion. Thank you to all my panelists. It was a great discussion. Thank you. Have a good day in Alpbach.